Good morning, everyone. Welcome back to our trading room, our DTS trading room. Hang on one second here while I get you my monitor. Okay. Okay, so the market's just opened up. And sorry, I'm trying to do two things at once here. Multitasker, I'm not. Okay, the market's just opened up and it looks like it's a pretty quiet open for the most part. Here on the NASDAQ, we'll take a look at the Eagle. You can see the market left off here around the 43, 34, 35 area, and that's precisely where we're opening. So no opening gap really to deal with, not this morning. And it also looks as though, we're kind of range bound. We're near the top end of Friday's trading range. If I draw a line through there, you can see we're still kind of hovering in this same area. So it's probably going to take a little while, a few minutes anyways, for the market to unwind here a little bit, find its feet. We are getting a first micro-macro cross sell lower. And this may be worth giving a try. I'm gonna try to get in with a single contract, but they just ran away on me. What I was going to suggest is that we do a single contract, and because the risk, there's no structure here, ideally we want to risk up there, we should go in with a single and perhaps try to let it run out. But that first micro-macro cross signal has since triggered and hit the high probability target, if that's what you were looking for. Gold very much sideways at the moment, and crude oil declining just a little bit. Here's crude oil on the Falcon, and you can see we had a trend change signal right here. Crude oil opened right about here, a little bit of a rally up, developed a trend change signal, and now crude oil trying to head lower. Good morning, Marlene. I'm glad that you're here. I got your email. This'll make it, and this'll save me a whole lot of typing. What Marlene emailed me, hold on here a second, and I will get you the email. Marlene's interested in trading the Nikkei, the Japanese index. Here we are. Okay, so Marlene asks, I want to know what your thoughts are on the mini Nikkei. It seems like a good trading platform, and it's especially a good one to trade in the evenings, which is absolutely correct. It is a good market, and I'm going to see if I can't get the index in my data feed. She says the problem seems to be that Ninja will only allow it on a live account with no historical data. My broker offers it on other platforms that include historical data and can be tested in sim mode, but then I can't use the DTS with my signals. As far as the historical data goes, if you have the ability, and let me see if I can't get the market here in my mix. Bear with me just one second. There is a CME Nikkei, which is the NKY. I'm going to see if I can get that one first. But what I was going to say is if you can't get the historical data, it's not a deal breaker. I think all you really need to do is just spend some time with the chart. The market should move pretty much in sync with the rest of the stock markets. Okay, I'm just waiting for the rest of it to load, so bear with me here a second. Of course, ideally, you'd like to use the DTS system for your trading. All right, here we go. So here's the CME Nikkei. It's the NKY. This is the hawk. Oh, almost looks like we might need the alternate settings on this one. So here is the Japanese session in my time. And it looks like it was a little bit quiet. Let's go back another day. There's the... Okay, so this is much more active then. Okay, so it looks like that one day may have just been an anomaly. So the Japanese market opens around 5 p.m. My time. So that would be right around here. Here would have been the open. The market traded up a little bit, got a little bit of a macro pullback signal, got a really extended first micro-macro cross lower. That also developed into a macro signal and a 4-arrow consolidation. Let me go back just one more day. What you want to do when you pull up a chart like this and it's a new market, you want to see how the signals are performing. Here on this day, the 26th, which would have been a Tuesday, you wouldn't have gotten hardly any trades on the hawk. There were no real signals here, so the session would have been a bit of a bust. Let's go back. Oh, I can't go back anymore. That's all I got. But what you want to do is you want to analyze the chart and see what your signals are looking like. If you're not generating enough signals, if most of your sessions are looking like this, try going to our alternate brick size, which would be the 446. So 4-tick hawk, 4-tick falcon, 6-tick eagle. Okay, and let's go back now to the 26th. 27. 26. Okay, so here's that session where at the regular brick size you would not have had any signals, but notice what happens when we dial down the brick size. So I'm thinking the Nikkei, the 446 is going to be the right brick size. Here we got a first micro-macro cross. Well, at least we got one signal. It wasn't a particularly active session, but at least you got one signal out of the trade. Usually it's a good market though. I used to follow it for a little while. I haven't followed it of late. Just one second while I load it on my other charts that have the alternate settings. And we'll take a look at the rest of the instruments. So that was the hawk. And in a moment we'll take a look at the falcon and the eagle. But like I said, as far as the historical data goes, obviously you won't be able to do any back testing. You're going to have to get a feel for it real time. All right, here we go now on the Falcon. Come on. There we go. So today on the Falcon, it's looking pretty quiet. That was over the weekend, so let's go back one more. And the market would have opened up right around here. You got a trend change signal. Now let's take a look at see what these values are like. So if we're going to short that signal there, can I cover it up there? No, not. Can I cover it to the crest? No. All right. Can I cover it up here? What the? Okay. Something's wrong. Yeah, something's definitely wrong. Okay, I've got the big Nicky here. I don't have the mini. You can see even covering that little position. If you have an extra $30,000 kicking around, there you go. You can take a single contract. Oh, we got stopped out before the market went down and hit our $50,000 profit target. Okay, so obviously that ain't gonna work. I've got the wrong market in the mix. Let's try that again. Oh, I think that was the yen futures that I did. Okay, Marlene says try JPM. Let me try that then. JPM might be your broker's symbol because JPM comes up as JP Morgan Chase. So as far as the Nikkei goes, I think this is going to be the mini right here. See, what I did is I plugged in the futures yen. I did notice that the point value was, $500. This is going to be the mini here, I think. Or this one here, the NU. We're going to try this one because it's on the CME. If it's on the CME, you should be able to get historical data for it. That's why I'm trying that one. So that would be the NKD, and we'll see if that loads. Okay, Marlene says try MJNK. Let me try that symbol. No, MJNK is not coming up either. Now, different brokerages will use different symbols, of course. Okay, so this is the NKD. Let's see what our position size is on this one. So up here, down here, yeah, this is the one we want. So on Ninja, or at least with the CME, the NKD appears to be the mini Nikkei. And currently I'm on the alternate brick size. I've got the 446. But like I said, if you can get the CME data or the CME Nikkei, you should be able to get historical. Another decent overnight market is the CAC 40. It's the French stock exchange. And 1 second here. The market's not doing anything, so not to panic anyone with our little detour here. Let me bring this over. If you search CAC 40, this is also a very reasonably priced market, and it makes some pretty nice moves. Now, I haven't followed it for a while, but for those of you who are looking for a market to trade during the North American evening hours, or for those of you who live in Europe or have access to a European time zone without having to stay up all night, this is a good one to check out as well. Gold is probably the most universal market, and there is a mini gold contract available. The mini gold seems to be a lot more fluid than it initially was. When it first came out, nobody seemed to be following it. But if you're looking for a market to trade after hours, gold is usually a pretty good one too. Just 1 second, I'll get gold up here. Okay, so here's gold on the hawk, just as a for instance. Now I know this is the full contract, but the mini gold contract will follow this one around like a puppy dog. So if you look at the overnight, you can see quite a bit going on. Gold opens right around here, Pacific time. But there's some decent moves to be had through here. Here's a couple decent macro pullback signals. Here's a first micro macro cross. Let's go check out the Asian session open. Oop, I got to go back another day. And we won't do Friday because nobody was trading Friday. So let's go back to Thursday. But you can see lots of activity here in the gold market. Sorry, I hope I'm not making you guys dizzy. All right, we're getting there. So this is the European session. This is the overnight. A little bit of chop. Here's midnight. Here's the London Open. And then here's the Asian session. So a fair amount going on. Where's 1700? Well, at any rate, you can see it opened here on, just to the left. This is around 6:30 my time, so the Asian session is kind of in full swing. A little bit of choppiness. This is your hawk, of course. Nice little first micro macro cross. Macro pullback that gave you some heat, but had some follow through. Here's a red bar buy that you can either buy or short the failure. Another first micro macro cross. So if you're looking for a market to round out your trading day, or if you're busy during the North American session and you have more time to look at the market in the evenings, or if your time zone is just such that the North American markets are too difficult for you to participate in, I would recommend you take a look at gold. And if you can't afford the full gold contract, the mini gold contract is going to trade very close to it. Yes, I was watching the the alternate setting for gold, but gold is big enough that the default settings will work as well. You're going to know as soon as you open your chart. Well, here, we still don't have anything going on, so I'll do this for you guys. So we're going to go find gold. All right, mini-sized gold futures. And it looks like you have a couple alternatives here. There's the E-micro gold. I would probably stay away from that. Here's the New York gold. They say it's a mini. It's a few dollars more than the CME mini gold. You can take your pick. So let's say we go with the YG. So we'll move the YG over there, the June contract. And see, it's the CBOT, so that's going to be the CME. All right. And now let's throw mini gold up on here. Oh, did I not put it on? One sec. I think I might have hit cancel by mistake. Okay, so here's the YG. Mini gold market. And you, like I said, you can look at the New York mini gold also. It's not like they're going to move independent of each other. All right, so this is mini gold now with the alternate settings, or pardon me, with the default settings. And what I do when I first load a chart, and it's a market that I'm not familiar with, just take a look at how the signals unfold and see where the session break lines fall. So here's one session, the end of it, there's the start. Did I get any signals through here? Were they quality signals? Well, yes, there's a red bar buy signal. It had good follow through. Here's our trend change. Well, no, not so much trend change as another red bar buy. Another red bar buy. Yeah, I'm thinking the stock settings are going to be fine. See, the session break lines are far enough away. If we had session break lines that look like this, obviously you can't do anything if your day is only that long, right? If your days are looking like this, we need to use the alternate settings. But actually right now, as far as mini gold is concerned, it looks like the signals are not developing too quickly, and they're quality signals. You see the signal developed about 5:45. It tripped about 5 minutes later, which is good. You got another signal about a half an hour later. It too tripped, and then you finally got some follow through. So it's not like this market is screaming along. You do have some time to think. You got some time to look at it and say, oh, well, should I short this? Should I avoid it? Well, it broke a low. We have a lower swing high. If I go in to short it, okay, here's the real test. Can I cover it there? Yeah, I can cover it there. Let's see what the dollar amount is. So it's looking like it's $10 a tick. All right, so there's the mini gold market for you. And for those of you who are trading the Raptor, you can see the volume's certainly a lot lighter than the big gold, but if you're only going in with a onesie or twosie, slippage shouldn't be a problem. Some nice hard edge bounces, great follow through. And let's see, this signal here tripped at around 12:30 and kept trending for about the better part of 2 or 3 hours. So again, not a real fast market. You know, patience is going to be important because these moves, great follow through, but it's really the type of trade you can put on, set your stops, read a book, go grab a bite to eat, watch a movie, come back. Oh, stopped out. We made some money. Hooray for us. Yeah, Tony says copper is a good one to follow too, but the problem with copper is it's crazy expensive and wicked. It is a wicked market. I know people who've done really well with copper. I kind of poke at it once in a while. Question here from Mark. Mark says, I see your Raptor cloud on the NQ that you're printing more buy signals than I am. I noticed the double cloud on your chart. I think that may be why. I'm not familiar with the double cloud or how to set it up. Can you touch on that? Sure. Okay, the double cloud. Now for you Raptor owners, if you're not aware, there is a Raptor Facebook page where Raptor owners exchange ideas, they exchange signals and settings, because of course the Raptor you can tweak a little bit. This is one that was developed by Ricardo, a Raptor owner. And what Ricardo was looking at is he was just looking at hard edge bounces, but with the single cloud he didn't get that many bounces. Sometimes the market came up shallow, sometimes it went a little deep. So he started playing with dual clouds, and frankly I think it just looks kind of cool. So I've adopted it as well. And with the double clouds, we've also incorporated what we call the cloud crossover signal. Now I've mentioned this to Ben, and I do believe that the future Raptors are coming out with the double cloud, but obviously if yours has the single cloud on it, here is how you get the double cloud. Go to your indicator window, scroll down here to your IW indicators, and the one you're looking for says IW RTS Raptor Cloud. Double click on that, and then you're going to find that you have two clouds in your assortment. The one cloud, what I've done is with the default cloud, I've changed it to an 8 tick from the standard 12. The other cloud, your 12 tick cloud now, you need to change the color on, or it's going to look exactly like your first cloud and you won't be able to tell the difference between the two. Go down here to where it says band color and just choose a different color, any color you want. Once you've done that, you also need to change your band edge color. Otherwise, once again, it won't stand out. So choose any color you like. Once you have it to your liking, click apply and OK, and voila, you will have two bands. I haven't seen anybody experiment with 3 bands yet, and of course we can get carried away with this. But as far as the Raptor goes, the dual band does seem to be a bit of a benefit. Now as far as the signal generation itself, I haven't changed anything else on the Raptor. I've got the standard 8-tick brick. My hawk bars on the Raptor are set at 6 ticks, or at least I believe they are. Let me double check. Yes, they are. So my hawk bars are set at 6. So I really haven't changed anything except the double cloud. Now, like I said, the Raptor is our more tweakable tool. For those of you inclined to tweak your charts a little bit. Okay, crude oil has made a little bit of a dip while we took our little detour. This was that Falcon signal that we looked at earlier, that trend change. Nice decline. Look at that. What a beautiful move. That would be my day right there. The market broke the primary support, and whenever we break a primary line, whether it be the primary support or the primary resistance, I normally expect a 2-zone move. So here's zone 1, here's zone 2. We'll get it more often than not. Sometimes it will come up short, but something to bear in mind if you're looking for potential targets. This morning, though, the NQ really seems to be range bound. A lot of overlap. See here on the hawk, it's very evident. As soon as you start printing a lot of yellow bars like this, and they're more or less on the same latitude, that tells me that the market is in a little bit of a sideways mode. It's not to say I won't take a signal like a first micro-macro cross, but I'm probably going to dial down the risk or just go in with a onesie. Here on the Falcon too, you can see our filter breaking up, our trend line waffling, a lot of, or a lack of follow through on the bars. I suppose overall I'm still a little bit more bearish than bullish, and that would be from the daily chart, which I showed you the other day. For those of you who weren't here, let me build a daily chart and show you what I mean. All right, I think if the market breaks below here, we should get another chance. So here's your daily NQ, and what we were looking at was this break right there. Now I'm going to show you something else here on the NQ. If we shoot a trend line across the top, oops, come on now. And now I pull this trend line down here. It's the same trend line, but again, we've got that breakdown. It looks as though the market's going to tail off. I'm guessing 4,200 is a given, and we may even see it get down here to 4,000. So overall, I'm a little bit more bearish on the NQ and the stock market in general because of what I've seen on the daily chart and that breakdown of that support area. So we've gotten a couple signals here. A couple hard edge bounces here on the eagle. We're producing another eagle signal. The problem is we're right near the bottom end of this trading range. The good news is we do have a second push. So the signal has engaged. It's faded away from the entry. So we know the current limit. We know where the buyers are trying to step in. Can I cover it up there? No, I can't. That is unfortunate because that's where it should be covered, especially given that we are in scalp mode for the better part of the next hour, hour and a half. Can I cover it to that swing high? Ooh, I can just squeak one in there. Not a big fan of selling near the bottom end of the trading range. Right, so here's the trading range. I would much rather get a sell signal up here somewhere than a sell signal down here. The sell signal at the bottom of the range is what's forcing me to keep my stop so far away. All right, well, here comes another one. We'll throw it in. Like I said, hopefully that overall downward momentum will help carry us. But it's not a pretty trade. And I'm not going to go too crazy here. We're getting sell signals pretty much across the board. Sell signals here on the Hawk, the Falcon, the Raptor working on another sell signal, another hard edge bounce. If this fails, however, we may actually end up with a soft edge buy, in which case we could see the market rally. Will it rally back to this morning's high near the open? I suppose it's possible. But the fact that this support is holding may be all the reason we need to try to buy in. And what I'll do with the Raptor, if we get that signal, is I'll just go in with a onesie and a runner. All right, well, here they go. Let's see if they take out this high and produce a buy signal. Oh, no signal yet. A few more parameters have to come into play. Come on. Let's see if we got a signal yet on the Hawk. No, we don't. Working a trend change signal here on the Falcon as well. So the Falcon, oh, there's the Raptor signal. So we'll take the Raptor signal. Also got a trend change signal here on the Falcon. So the trend line changed color. We have our up, down, up pattern. We have the higher low, which is what we're looking for. So median support is going to be around 43.35.36. Next stop 43.53 if we break above there. And I'm going to delete my break-even trigger on the Raptor. And I'm going to put my stop below the low. Well, we'll use that one to start. Oh, they gave me a break even anyhow. One sec. It looks like I did hit the break even trigger just before I could delete it. Not bad. All right, I'll allow the trade to take me to break even now. I'll hold it there for the moment. Here's the tricky part. We should get a little bit of a reaction, a little bit of a swing as we get toward the top end of this range. In fact, you know what? I'm being a little bit silly here. because we're very likely range bound. If it flashes 100, there it is, I'll take it. It's probably going to go higher from here, but you know what? There's $100 on the table. I'll take it. We got that first micro-macro cross signal here in the hawk as well. When the market is trendless, it's a good idea to try to scalp. You know, if you have $100, like I say, in open profit, take it. Can the market go along without you? Yes, absolutely it can. But I guarantee you'll be a lot more disappointed giving up the $100 than not making an extra $50 or $60 that you don't know is there. Okay, Marlene asks, can you explain the signal that you just took? Absolutely. So on the Raptor, especially with the clouds, with the bands, we have a signal that we call the soft edge buy or the soft edge sell. And I'll show you a couple of examples of this. Because it's a counter trend signal, you need to be very careful how you take it. Let me see if I can find you one that's a little bit more textbook looking before we go into the one that I just took. All right, so here's the other day. The market's obviously in an uptrend, and we're paying attention to how the price is relating to each other. Right? It's very important that you pay attention to the left side of your chart as much as what's going on here on the right side currently. So we see the market is in an uptrend, and it's made its characteristic little pullback. At this point, we fully expect the market to continue higher, right? After all, we're in an uptrend. But what has happened? The market has come up short. We've had our test of the extreme, and now there's a suggestion that the uptrend will fail. If the uptrend fails, I'm going to produce a counter trend signal. I'm going to produce a sell signal. This is called a soft edge sell because we're on the soft edge and we're selling. These signals very often produce when the band gets very wide. And because it's a counter trend signal, it's also going to be a higher risk signal. So a lot of times I'll just go in with a onesie. If the trade setup is looking particularly strong, I will take 2 contracts because if this signal breaks down, the follow through can be very large. So here the signal engages, and you can see that we had some pretty decent follow through to the downside. Let me find you another one with a larger cloud. Okay, this one would have been a little bit more difficult to spot because it didn't get a really good test of the extreme. But notice the cloud is a little bit wider. This was the only test of the extreme that you got, and unfortunately it would have been hard to see in real time because honestly I would have been anticipating when this one printed that it would go a little higher still, and then here it comes with the signal. Okay, so Marlene says, I get all that, but the one that you just took looked different. All right. It looks different because the market was choppy going into here. We do have a downtrend. It's a laboring downtrend, right? We've got this leg lower, then we got a little bit of a couple sideways legs and goes a little bit lower still. The tip off was right here when the market started to make a higher low. When the market failed to resume the downtrend and keep going lower, and instead started to trade higher. The next test was this level right here. Why is that a test? Well, this is where the sellers have always stepped up, right? Every time the buyers tried to rally it, the sellers have stepped up and kept pushing the market lower. So what happens this time is, oh, we actually broke. Okay, so now things are starting to look really bullish for us, or more bullish. Now I'm waiting on a signal to print. See, here come the sellers again, right? The sellers are trying. They're trying to recover the market. Do we get a sell signal? Do we get a sell signal? No. Oh, all of a sudden we get a buy signal. So the buyers, once again, have made the market swing a little bit higher. Everything is suggesting at this point that we're going to see a little bit of a rally. We produce our buy signal. Stops would ideally go down here below the current low, if you can afford it. If not, keep them as far away as you can, because like I said, this is technically counter trend. The market brings us in. Right about here, I'm expecting it to flinch a little bit because we're getting near these highs. So that's why I didn't want the market to grab my stop from here and bring it up to break even. Because if this flinch was a little bit more pronounced, it would stop me out of break even before the market has a chance to get to my profit objective. So I was trying to hold my stop back a little bit, and you can see there was some activity here. The sellers did try to push the market down, and that would be based on these highs. We know there's some selling around 43.38. But the buyers overwhelmed them and just kept pressing the market. See here the sellers again say, okay, well, 43.38, we were too early. We'll sell 43.40. And they tried, and the buyers took it away again. So at this point, I can say, all right, time for me to start rolling in my stops. Time for me to consider how much open profit do I have. And I chose to take profit, but the market, did continue higher from there as well. And you can't beat yourself up for taking profit. Ideally, I would have 2 contracts in play. I'd bank profit on one. I'd leave the other in as a runner. It's not always feasible, but there's nothing like taking profit when you have it. So what you want to pay attention to is you want to pay attention to how the market is comparing to what it has done. Let's say the market, it's floundering here a little bit now. We're kind of broke the high of the morning. We're looking at some resistance from a few days ago, I'm sure. It's somewhere around 43.50. That was our primary resistance line. So we're starting to feel a little bit of pressure from the sellers. So let's say the market trades like this now. It comes up and gets close, or let's say it even matches the high and now starts to retreat. What if I get a sell signal right there? Should I take that? Class? Anybody? Can think about it for a minute. Marlene says yes. That would be one to take. Anybody else want to take a stab at it? Ryman says no. All right. I I would take a stab at it. And the reason is it's failing again, right? Even a matching high, or even if this high breaks just by a tick or two, the premise is still that the buyers are starting to lose their grip on the market. I would anticipate if this signal printed that the market would probably try to go here to the hard edge. That would be my objective. These soft edge sell signals, their target is usually the hard edge of the band. I need to cover the trade above the high. Why? Well, because we're obviously in an uptrend. This is obviously a counter trend signal. Where will I know with 100% certainty that I was wrong about the trade? Well, if the market reverses once again and trades up through the high, right? Then I will know I was wrong. But if this signal prints, if the market flounders here, and the buyers can no longer push the market higher, and I produce a sell signal, it would be worth a go. I wouldn't go crazy. I wouldn't demand that the market fall all the way down here to the lows. But there is a chance that they're starting to get a little overextended. We are very much sideways today, so it's characteristic of a sideways market, of a ranging market, to move between the highs and the lows. If we get a failure signal here, I would like to see it develop rather quickly. That's the other thing with these soft edge buys and soft edge sells. They're not usually really drawn out. This one that we saw down here, that's about as big as you're going to see them get. Usually you really have to be paying attention because it could develop within 3 or 4 or 5 bars. There's a certain element of trading that is always, well, I'm going to say guesswork for lack of a better word. But you're never going to know with 100% certainty. There's always going to be that element of risk. That's why we need to protect ourselves the best that we can. Right, so here they come. The buyers now stepping up, showing their hand, if you will. And now we have every reason to believe that the buyers should pick up the uptrend and continue higher. Well, assuming this current bar finishes bullish. Okay, so here they come. Here's the press. And like I said, we would fully expect the buyers to resume the trend. And what's happening to the buyers? Notice the width of these bars as well, how there was very little selling. There was some selling pressure, but the buyers didn't really step in until here. This is the bar that has the most volume associated. Now the buyers are trying to rally the market, but it doesn't look like there's much volume with their buying. So if the sellers turn around here now and try to give them a whack on the head, then I can see a move here to 43, 35, 36. Being possible. Boy, it's a quiet day for a Monday, I'll tell you that. Good question, Marlene. Marlene asks, is it better to watch just one chart and one bird? By one chart, I'm assuming you're asking one market. I would say yes, especially when you're starting. Pick a market, learn that market. I've mentioned this before, but I think the NASDAQ offers some great opportunities for traders. Okay, I've just got my order ready here in case we get the failure now. I'm expecting a sell signal. The NASDAQ trades at $5 a tick, which is a huge bonus. It has good volatility. In that, I mean the ranges are such that you can capitalize on a move. It doesn't usually unfold so quickly that you can't make a decision, that you don't have time to look at the chart and say, oh, this is what's going on. This is what I'm going to do. But I think there's a huge benefit for this beginning trader to learn one market. The signals are the same, and yes, you can blindly go in and just start trading signals, and it doesn't really matter what market you're looking at. But there's also these little personality quirks of each market. When I started following the mid cap, I noticed that on the hawk, it had insane follow through on the red bar buys and green bar sells. And those are signals that normally come in at the end of a trend. So whereas I may get very aggressive buying red bar buys and green bar sells on a signal or on a market like the mid cap, I may not necessarily do that in a market like the NASDAQ or the mini Dow or something of that nature. Now this signal is not quite as pretty as I hoped it would be. I do need to cover the trade above the highs. You see, we've drifted quite a ways already. We're already into the hard edge. I wanted the signal to produce up here, which is why I'm going for the second push on the entry. All right, so now we've got the buyers coming back in. I'm going to nix this signal here just for a moment, and I'm going to hold out for a larger retest of the high and another failure. Marlene asks, how do you set the volume on your bars? That is the dynamic equivolume bars from Indicator Warehouse. This is an add-on. It works on any chart style, unlike regular equivolume bars. And once you load them, they would be in your chart style assortment. So those are the dynamic equivolume bars. If you don't have the dynamic equivolume bars and you don't want to purchase them, you can also run a volume chart below. That'll give you a pretty good idea of what's going on volume-wise. So you can see which bars have got more volume associated with them. One thing you can be certain of is that volume always increases where the market turns. That's a given. If the volume is light, that's not a bad thing. It usually means that there's not much resistance to the current direction. Oh, I forgot. You can also set your volume to print live, so you don't have to wait for the bar to finish. So you can see the current volume on this bar. A volume is another one of these comparative tools, right? You're always going to compare the volume to the bars to the left. How does the volume of this current bar compare to the volume of the other bars? But the dynamic equivolume bars, they're a handy little feature. They allow you to see the volume at a glance. Okay, so we're getting now a hard edge bounce. This is actually a buy signal for us. What else have we got going on? Is the market looking a little bit more bullish? The Falcon here looking a little bit bearish. Everything else looking a little bit more bullish. All right. Now we've got a comparable signal on the Hawk. I believe there is also a signal. No signal yet on the Eagle. We got the red bar buy here on the Hawk. And what I'd be looking for is a retest of the highs, a resumption of the trend. Oh, they just kissed the profit target. Would have hit the break-even trigger. So unfortunately, we'd be out, or fortunately, we'd be out at break-even on that trade. But for the most part, we're just kind of bouncing around here a little bit right now. Okay, we're working a trend change signal here on the Falcon. So the trend line changing color. Oh, and here we go. We're getting a full-on trend change signal. Well, I'll wait for the second push on this one. Second push simply means I let the signal engage, because I'm late for the signal anyhow, and then I want to see it fade away from the signal, fade away from the entry, and that's what it's doing. You see, it's trying to trade up there. So I know the current limit of the bar. That's where the sellers, or pardon me, where the buyers are prepared to step in. I'll cover the trade to there, and I'm a little bit late putting all this together. But now I would be looking for the market to drift down here to this 43, 35, 34 area. The way the market's moving today, though, I think dialing down your risk amount is probably prudent. just kind of flip-flopping here a little bit. We'll cancel that order. Well, not much to talk about. Markets pretty quiet. Again, a lot of this sideways choppiness. The red bar buy signal here, which would have been worth trying to buy because we didn't get a really good retest of the extreme here. As it turns out, this is going to be about as good as we get. But that would have been worth trying to buy. Market goes up, hits the target, doesn't fill, or most likely doesn't fill. Hits your break even, and now it starts moving lower. Well, remember with the red bar buy, it's also our counter trend signal. You can short the failure of that signal. You can also use it as an early warning that a first micro-macro cross signal is coming, and that's pretty much what this one is looking like. But you see with the overall choppiness, look at the ranges that we're having to keep. Here's a macro pullback signal. Again, this is why you don't want to keep your trades overly tight. At the very least, you want to keep it here to the macro line. Ideally, you want to have a little bit more structure to it, but there's no structure unless we go all the way down there. And of course, that's going to be out of reach now. But take a look at this. As ugly as this trade is, let's say we risk it down here, the market's moving against us. We're still in this trade though, aren't we? We still have the opportunity to hit our profit target. Sometimes the only obstacle between you and a profit is keeping your stop loss order out of the way. Or hanging in a trade long enough to actually realize a profit. Steve. Steve asks, hi, second day here. Well, welcome, Steve. You showed a cheat sheet for trades on the Hawk last Wednesday during the free room. You indicated it was in the literature somewhere. I haven't been able to find it. Shoot me an email, Steven. And you can email me at eric@supportandresistance.com. And hold on, I'm sending everybody that link. That's Eric, E-R-I-C-H, at supportandresistance.com. Just send me an email and I will be happy to send those cheat sheets to you. All the cheat sheet does is help you identify those high probability trades that we're going to want to be focusing on. All right, well, we're going to hang in the room here for a few more minutes. I've got an appointment in about an hour's time, so we're going to close up the room a few minutes early this morning. Yeah, like Tony says, that's E-rich. I had a friend who used to call me that too. I was almost a Martin, but my folks were not ones for nicknames. They didn't want people calling me Marty, so I got Eric, because they figured nobody could make a nickname out of Eric. Well, my friend did. He started calling me E-rich. And occasionally I'll get a telemarketer who's never seen, that's a European spelling, by the way, for those of you who haven't seen it before, with an H on the end. My folks were European. Every once in a while I'll get a telemarketer who hasn't seen that spelling before, and I'll get E-rich. And all I think is, really? You can't see Eric in there? Oh well. I've been called worse. I'm wondering here if we get a breakdown of this macro pullback signal, if we aren't going to see another rally. You see the eagle is already into the hard edge. We're getting some conflicting signals, which is to be expected. Hey, we're in scalp mode for another 40 minutes, after which we're moving into trend mode. Well, I certainly hope that's true. So we're getting a hard edge bounce. We're against the ATR. I wouldn't get too excited about buying the eagle just yet. However, if we get a failure of this macro pullback signal, you see we're also into the hard edge here on the Raptor. I'm wondering if that's going to push the market higher. All right, so you can see I missed this macro pullback, but if we set it up like so, they're trying. Yeah, there they go. They're going to get it. Okay, so the macro pullback signal, actually, it worked out. Let's go back here to the eagle where I have a little bit more room to work. If I shoot a trend line across the lows. No, we're not at the lows yet. I almost thought that we were. Okay, a possible late filter entry here on the Falcon. So the late filter entry signal occurs when the filter goes out of sync, comes back into sync. The trend line never changes color. Very important. I'm not in love. I like the signal. It's a very high probability signal. I'm not in love with this context, though. No real good test of the extreme. No real good reason to suspect that the sellers are going to press the market lower. I would dearly love to see this signal get a little traction, get some green in there so I can ignore it. And maybe look at a buy. Okay, so far the macro pullback was strong enough. Here come the buyers again. And we're getting the warning dot and triangle here printing on the eagle. Sometimes with your eagle, the warning dot will become absorbed by the triangle, not to worry about it. The triangle and hash mark is what shows you that the signal is complete and that it's decision time. All right, I think this is going to be the type of trade that if I'm going to take it, I need to be a little bit more aggressive on my entry. I'll take it on the hash mark. Can I cover it below the low? So there's the hash mark. We're currently against the ATR. That's a problem. All right, so we're long. I'm going to roll my stop a little bit since I can afford a deeper stop. We'll see now whether we can't sneak a couple dollars out of this trade. Come on. So the ATR is in sync now. You can see that this bar right here flipped the ATR over. This would effectively, in most cases, become our signal bar, in which case we would be long from around 43, 42 half instead of 43, 41 half. So we got a slightly better entry by entering early. Now we just need for a little bit of follow through. Come on. Get up there. We'll give you a little nudge. Give it a little push with the mouse. Marlene says it was a nice Falcon trade. Let's take a look at... Oh, the Falcon short here. Yeah, and now we've got actually what we refer to as an early trend change signal on the Falcon. The other reason I'm keeping my stop a little bit further away on the Eagle is that this Falcon should develop into a proper trend change signal, which means somewhere through here we're going to get a little pullback phase. And I'm trying not to get my stops in there so tight that I get stopped out on this part. All right, so the Eagle plodding along. Or trying to plod along. And I'm afraid I'm going to have to duck out. I'm not going to be able to watch this trade with you to the end. If you are long here, well, this is our obstacle. Keep an eye on your open profit. Like, don't be silly. If you get up here and you have $100 in open profit, or it looks like it should be, yeah, it should be about $100. And it looks as though the market's starting to flounder. Don't worry that your break even is up there. Get your trade to break even. Or better yet, take some of that open profit. There is going to be a little bit of a hesitation through here because, like I said, we need to see that on our Falcon. So don't be alarmed because the market's peeling against us a bar or two. After that happens, we should see the buyers try to come in one more time, and that's the time we're going to get more aggressive with our stops and with our profit targets, because if the buyers fail at this next leg up, then they're going to lose control of the market and prices will head lower. And that's what we do. We just watch who has control, and we try to get in on the right side. And if it looks like our side is losing control, then it's time to get out and change sides. All right, you guys, have yourselves a great day. I'm going to see you in the trading room again tomorrow morning. And of course, if you have any questions or anything, email is always open. We'll talk to you soon. Bye for now.